Hey, good morning, everybody. It's Hammer. Today is Monday, September 9th, 2024. I, of course, am with Originator Success here with your daily mortgage rate update. The only place on the web where you can join me live each and every weekday morning, 9:30 a.m. Eastern Time. This morning, coming to you from the Bismarck, North Dakota airport. But I have awesome Wi Fi. Tell me that the Wi Fi is not great. What's the camera and the audio quality like today? Let me know in the comments. Mr. Ron Siegel, how are you, sir? Ron Siegel Radio. I see, my man. And what's today's national day, Ron? Don't be slacking on us. Let me know the quality of the video and the audio, y'all. I'm curious. It's funny. This little tiny airport has wicked fast internet. Good morning, Megan Lindberg, Deb Dickinson, Mallory Fotiatis. It's great to see all of you. Obviously, if you're here live, say good morning. If you're watching on the replay, don't forget to give me a hashtag replay in the comments. Don't forget to smash that like button, tag an hello friend, share us in a group. Uh, Also, make sure you always hold on to your sense of humor, like my man Ron Siegel, who said today is National Wi-Fi, Good Wi-Fi Day, National Wiener Schnitzel Day, Wiener Schnitzel Day. I actually do like Wiener Schnitzel, having a little bit of German heritage myself, so that's always good. Thank you, my friend. Thank you for posting that for us, letting us know what today is about. But yeah, I'm excited to have all of my happy, good Wi-Fi. So I'll take one more minute. Let's say good morning, Monica Dinkins. Awesome, great to see you, Brandy Brickler. Great to have you here. Allure of the Seas on the way to Mexico. Have a wonderful time, my friend, and thank you for joining me while you're on the seas. And I hope you have a great cruise and wonderful excursions. Good morning, Michael Love, Candido Diaz, Amy Blauser. Great to have all of you here. All right, Angela Walters, you snuck in. Good morning. Let's go ahead and go to the other stuff here. Dude, I'll tell you. Anyway, let's go back here. Let's go to the share the screen. Let me turn this off and we'll throw this up here. So, anyway, today rates should be about the same as Friday, maybe a little bit better depending on when you got rates. I'm going to talk more about what happened with the labor market stuff, on Friday. In fact, we'll jump over and do that. Reprice risk on the day today is low. I'll throw that up on the screen in a minute, but there you go. Actually, you know what? Here, let's get rid of that. All right. So looking at what you got on the screen here, mortgage-backed securities currently they're down 3 basis points on the day. It's basically flat. But let's zoom in. Let's talk about what happened more on Friday, right? So Friday I was at the Balloon Festival, had a fantastic time. Um, I'll show you guys some pictures in a minute, but the what I want to go over here is this, right? So on Friday, we did get jobs data. The jobs data on Friday did show basically a weak market. Now, unemployment got very, very slightly better, but even still, the number of jobs created, 142,000, I think it was, if memory serves correct, just a very low number. I mean, again, overall, not anything that's going to light the fires, but you could see that bonds did really well, kind of going higher and then lost this candlestick here. We could see that if we look at the 2-day chart, we had a very strong initial reaction to the jobs data, but it just did not last long. It spiked high, and then a few minutes later, we were really just flat. I mean, it was like an initial trade, boom, and then nothing. And we even lost a little bit of ground on the day after that data came out before finally being up about 15 basis points. So we ended the day on Friday a little bit better, but most lenders had already come out with pricing. Since they came out with pricing right here around 10 a.m., it wasn't really, we weren't really seeing all those gains. And that's why it wasn't really all that great. And you may see some better pricing this morning, but generally it's going to be about the same when you're looking at these little charts here. The 10-year Treasury yield 3.74. You could see that on Friday it dropped to 3.71. It's up a couple of ticks now. Not a big deal. We saw a real steady decline last week. Interesting article here on Bloomberg that I wanted to show you guys. It says the bond market rally rides on how fast the Fed cuts rates. And that's kind of leads me to the next interesting thing, which is the idea of how fast will the Fed cut rates. After the jobs data, I expected to see a bigger move to a half point rate cut, which would be this left-hand column, right? Right now, the Fed funds rate 5.25 to 5.5. It runs in a range. If we were to lose a quarter, it's 5 to 5.25. This is basically we're back to 3 to 1, 75% expectation that we're going to see a single quarter point rate cut in September this week, the 18th actually. So here, there's about that we will see a half a point rate cut. Market's really not pricing in the idea that the Fed is going to cut that in. And you're not going to see rates move significantly lower from here until markets believe that the Fed is more likely to cut, likely that it's going to happen in September. It looks like markets are pretty well dialed in that we expect to see a quarter point cut. And what's funny is in this article, the article talks about how you have, different people. Bond traders struggle to predict how the high that raise interest rates and find the way down just as vexing. Jamie Patton here says the Fed's going to have to lower rates faster, more aggressively than what the market's priced in. Bob Michelle at JP Morgan says that he doesn't see anything breaking and that he's investing in corporate bonds. So you're seeing these different views on it, and nobody really knows what's happening to it. It's all different opinions on what we've got happening. So let's see. There you are. Ron said, interesting thesis by Les Parker today. The debate tomorrow might be market moving. I don't think that it will. That's good, but that's what does anyone else think? Do they think politics is going to come in to change the whole thing? Giddy up, Mr. Randy Teagle. Excuse me, all. He says the debate tomorrow might be market moving if Harris does well and looks like a possible winner. This portends increased government spending and more inflation. Bad for bonds. If Trump does well, there'd be less government spending, good for inflation. But people argue that Trump would also probably increase tariffs, and it would do other, people are going to have more money, which means more inflationary, tax cuts, blah, blah, blah. So they kind of, these theses don't mean anything. But I appreciate you bringing them up, Ron. I mean, I do. I just don't see much. I don't think that the debate tomorrow is going to have any effect on anything. Remember, also, we are in a Fed blackout period now. It is basically the 10 days before the Fed meeting, so we're not going to hear from any Fed members. So this week, we, of course, are getting the CPI inflation data, but if we did not see anything really market moving from Friday's labor market data, we're not going to see the inflation data shake things up. So that puts us in a position where I'll throw it back up on the bottom there. I'm floating, right? I think that floating everything makes sense right now. You put it up here like this, right? So my advice is cautiously float anything that's closing in the next couple of weeks. Again, I don't think that even if we see a really great inflation report, that it's going to change that view that the Fed's going to cut by a quarter point on this meeting. And let's go back to that for a minute. Hold on, let me go back to here. Let me change slides. There we go. Right. And if we go back here, it's the idea that we're looking at now is November, and markets currently expect in November that we're going to be at 5, and that we'll see, basically there's a pretty good consensus that we'll see a half point cut in November, after the election, by the way. December, we're looking at the idea that we will be ending the year down a point, which would be 4.25, or 1.25. So markets do think the Fed is going to have to take bigger rate cuts. They just don't think they're going to start out with a big rate cut. So, I mean, this is a big deal here because you're talking being 1.25 lower. And when we look at that with the compare, let's look at where that was, recently. Just a week ago, that was much lower at 21%. Now it's up to almost 40%. It's almost double. The expectation that the Fed would make a bigger rate cuts as we get into the end of the year really increasing. And you could see here a week ago it was 30% expectation that we had 3 rate cuts of about a quarter point. That would have put us at 4.5, and that has dropped. So that's the big difference that we saw from the labor market data is it didn't change the September expectations. Those are basically the same, right? But if we look at the December, it made a big difference. And you could see that, there was some belief that that'll happen as quick as November. But markets think it's going to, the Fed's going to be forced to make bigger rate cuts. This is a 1.25 where we were looking at 3 quarter point rate cuts this year. This would be significantly more. So we'll have to see if that's how it plays out. Again, for today, bonds right now slightly positive on the day. They'll bounce up and down a little bit. You're not going to see a lot of movement on this. Nothing that you have to really worry about. Let me go back here. Ron said the best part of your reporting today, the Fed in blackout period. How Nick Timiraos can still speak. Yes, that's true. The Fed whisper. But I don't think that we're really going to get anything. I think so, and that's why we're floating, is because when we get to that September Fed meeting, we're going to have Fed Chair Jerome Powell and his press conference, and markets are going to find out, how aggressive do they think the Fed is going to be. They're going to be listening for all of those signals. So, but for this week, it should be a pretty calm week. I don't think we have to worry too much. I do think we're going to end the week slightly better rates and pricing than we begin it, but it's going to be slightly, not huge. Very similar if we look back and take a look at where we've been. We're at 6.27. There was a nice drop on Friday to see things drop down. We've been in this just slowly kind of moving steadily lower area. I'm surprised to see the rate sheet move here based on the on the bonds. I would not have anticipated that to be quite as big as it is, but let's go with it. And the idea is, I think you'll see a little bit of improvement on the week, not much, just a little, but will take us down and kind of see that get better. So that's what I'm anticipating this week. That's what I think is going to happen. Like I said, today, I don't think you have to worry about much anything. Be taking it on the planes. If anything does move, I'll let you know. And that is it, my friends. I hope you all have a fantastic day. I'll be coming to you from the office tomorrow, where my internet is not even as good as it is here at the Bismarck, North Dakota airport, but at least I'm settled in, and I'll be able to say hello. So, all right, I'll see all of you tomorrow, and have a fantastic day. Thank you. And Rob Stewart, welcome. Glad to see you, even if you're late today. So, all right, everybody, have a great one. I'll see you tomorrow. Bye-bye.